speakers that you see up here on the panel. We're going to have two segments. The first segment is we're going to go around and everybody is going to give their thoughts on market sentiment. Market sentiment meaning, based on where the major indices are, macro conditions, X, Y, Z, how they are feeling on the market currently. And then number two, we will go into stock picks. We'll keep the limit on stock picks to 3 picks for every person. I will write down the picks and I will tweet them out after. So don't worry too much on that. For the Tuesday night space, we do have a set panel each week, so we do not bring up people from the audience. If you have a extremely pressing question, you can feel free to tweet at us, and perhaps we'll dive into it. But typically, this is a bit of a set panel. So I do see a couple people requesting. I just wanted to let you know that. No offense to anybody. We just have a set panel for this, and we've been doing it for month after month after month. With that being said, let's dive right into it and get started. And as always, Danny, would you like to kick us off?
Yeah, absolutely. Thanks for having me. It's always a pleasure to be with my cohorts up here on a chilly Tuesday evening here in New York. Actually, it's seasonably warm, actually I think the high 40s. So nice little heat wave that we're getting, but heat wave with the market too, a little bit, right? SPY looked kind of interesting today. Yeah, I mean, we broke our downtrend line. We came back, we retested it, we bounced back up, just looking at the 30-minute. We had an inverted hammer forming at the 50% retrace level. But we held over 450. And I think, I don't know if it was earlier today or maybe it was yesterday's space where I said 450 for me is going to be the key pivot level that I'm going to be watching on SPY in the short term. And we closed over it. So I thought that was a good sign. The Qs, came right out of the gate. Nice flag breakout right into that 1272 extension at 360. I did mention 358 on SPY, or excuse me, on the Qs, and we closed at 359. So I think for the short term, so far so good. We still have CPI data on Thursday, so cautiously optimistic going into that. Where we go from there, I really just don't know. But really good day trades today, and we'll talk about some names that we're setting up that I took, and possibly some other names that are coming into the end of the week. When we look outside the major indices, starting to look at some of the ETFs, travel stocks. I know we have Expedia earnings on Thursday, but travel stocks moving a little bit. Jets was up 4.1% today. K-Web, that's your Chinese stock, tech stocks, that was up 4.1% today. Even iBuy, which obviously PayPal and Square, part of iBuy, that's actually iPay, but iBuy up 2.9% today. So not too bad. Looking at the rolling 7-day, Jets and financials have been leading the way. Jets up 6%. Financials up 4.4% since last week. So that's kind of, what's been going on ETF and index wise. But listen, I don't think we're out of the woods. I know that's not what everybody wants to hear, but we have to, face reality. I think for me, the next key level on SPY is going to be 453. That's going to be our 618, and that's actually right at the gap down from last week. So if we get over 453, I would expect a pretty quick move of 3 to 4 point bounce up to the February 2nd highs, right at around 458. So that, I think, is a very tradable event. But into that level, then I think we have to kind of wait and see whether we get there before CPI data. I really don't know. It's so hard to say. And then from the Q's perspective, we've got a wedge forming under that gap down as well. And so I'm looking for a tradable event over 360 up to 362. And then we're in the gap there. And again, that is a little bit of a bigger gap up to about 367. So that's what I'm kind of looking for on the Qs and the SPY. I'm still not holding too much overnight, although the day trading, it's not as much quicker trades as it's finding where that relative strength is and just taking advantage of some of these trades to the upside. So I'm sure Mel can speak to some flow. There was some interesting flow today on a lot of the Semiconductor stocks, we'll talk about individual names, but we saw some nice bounces, like in Nvidia today. So I thought that was pretty interesting. But yeah, like overall, slightly more optimistic in the short term, but still, my thesis is going to be to the downside. Unfortunately, I don't want to burst any bubbles up here. I still feel like we have another leg down in us, but that doesn't mean that the leg that we're taking to the upside isn't tradable. I think it really is, but we just have to be, very cautious taking these moves to the upside. But yeah, I'm sure we'll dig into some of the individual names, but that's what I'm looking at right now for the major indices.
Well stated, Danny. For anybody that is following along at home, when we refer to the S&P 500, we are looking at SPY. You can type that in on really any charting platform, or even if you just want to go into Google and type in SPY, and you'll be able to see some of the levels. If you're not on a charting service, you probably won't see all the key indicators that we are using, but a lot of people here are going to be discussing moving averages, which you can look up on Investopedia. It's a fantastic resource. We'll explain that to you. Some of us will touch on anchored VWAP, which is anchored volume weighted average price. Also, I'm sure has information on it on the internet, and a couple of other indicators such as volume shelves and things along those lines. But right now, for everybody that's listening, you just heard it from Danny, SPY still right above the 200-day moving average. It's just one of its key moving averages that we like for it to stay above and well above, preferably. The Qs are still a bit trailing. They're currently below. They did have a green day today. 1.16% it looks like, but still decently below their 200-day moving average, which is closer to that 367 line. So SPY, 500 largest companies in the United States, QQQ, the NASDAQ, more tech-heavy and tech-weighted. So those are two of the large indices we'll be following and we'll be using. And then also Danny mentioned that CPI data, that is the Consumer Price Index, that'll be out on Thursday. That is something which definitely has the ability to move markets. So just things to keep in mind. Thank you, Danny. All right, let's keep it rolling. And Andrew, would you like to go next?
Yeah, sure. So I think Danny covered the landscape pretty well. A couple of things that I'm looking at and things that I thought were super interesting today. So I've been a little bit more positive on the market. And what I noticed for today was we had a decoupling where these 10-year Treasury futures and bond yields are pushing to the upside. And at this point, the 10-year Treasury is almost at a 2% yield, and we're either at or above where we were pre-pandemic for Treasury yields. So the fact that we had Treasuries that were selling off and the NASDAQ was actually trading to the upside really nicely, I thought that was a very positive divergence that I noticed pretty early this morning. And I'm noticing there's just a couple of things that, I know there's this narrative like the market's going down, and maybe it will in like the intermediate term, like who really knows as the Fed starts tightening. But I'm seeing a few things that I don't normally see when the market looks like it's about to like crash or fall into oblivion. And I notice Bitcoin bottomed out maybe like a week or so ago, or it might have been at the end of last week. And Bitcoin is really like the apex risk asset. Bitcoin was really like the first of all of these different asset types to really sniff out this correction and start moving to the downside. So seeing that asset is bottoming, that's definitely reassuring. And that's not something I think I would see if the market was about to spill to the downside. The other thing I noticed is the small caps appear to have bottomed as well, or at least like a short-term bottom. One thing I noticed is they just made, they made a low, then they made like a short-term high, and they just made a higher low and then bounced off of that. So I'm like, small caps with some bottoming action, that's not something I typically see either when the market's super weak. And then for my process, I track dark pool buying, very, very closely. And dark pool buyers have been incredibly aggressive over the past week or so in terms of their buying. So one major component of my process is the dark pools and what they're doing. And the other process is the market trend. And now that we're above the 20-day simple moving average, my trend model, which oscillates from -3 to +3, into the close, flipped to +3. So based on my process now, I'm 100% long. And I think there's a couple of key events like Danny mentioned We do have the CPI data coming out on Thursday. And I think the key lever there is right now, based on the Fed Fund futures, there's a 100% probability that we're going to get one rate hike in March from the Fed. And that's basically baked into the cake. That shouldn't really surprise anyone. The major pivot is, do we get one hike or two hikes? And as of right now, the probability of getting a 50 basis point rate increase is 25.9%. So I think if the inflation data comes out super hot, that'll likely scare the market, and the probability of getting two hikes increases. And my base case is that this inflation print on Thursday is not going to spook the market. And if that happens, we'll likely see that probability of two hikes go down. And I would imagine we'll see some relief in the market. So right now, I'm positioned for, the relief rally. And yeah, in this market environment with how choppy it is and all this uncertainty, I'm just following my process, but knowing in the back of my mind, if things change, I'm going to have to pivot. But yeah, that's really what I'm seeing so far in this landscape. And then we have options expiration coming up in a couple weeks. We have some positive dealer flows that are likely going to end this Monday coming up. So if we get the nice inflation print, that could give us a nice rally in the market. Maybe get SPY to like 456 or 460. And come Monday, that's probably where I'll start taking some risk off. So I'm just trying to be very tactical in this environment.
Yeah, totally makes sense. Excited to hear, I've really admired your model in the past and everything that you are doing, Andrew. And so excited to hear that it is moving back towards the positive side and towards the bullish side. Hopefully small caps are forming that base here. I've definitely been following a lot of different sentiments across FinTwit. It's a tough thing to look at. We had this massive fall, but we had such a big run up over 2 years. So it's kind of like, where does that bottom come in? So absolutely a little treacherous, but each week here over the last few weeks, we seem to be inching more towards a little bit of cautious bullish sentiment. So we'll see what happens. But thank you for chiming in here, Andrew. Okay, Mel, would you like to go next?
Sure would. Definitely looking at a lot of the same things like Danny mentioned. I think that's where everybody's kind of had their eyes on the SPY, that 450 level. If you recall, it's been, I guess, what do we've got here? 2 weeks now, about a week. I know we were discussing it on the last session, but we have seen size, very, very, very large size dark pool activity at these lower levels. So it first started off with 34 million shares at 431. We've been able to hold above that level. Additionally, we had another 32 million shares at 441.84. So we came down, held that level, and bounced above. So I've been looking, 450.17 is my bigger level. So really wanting to see that close above there. So just like that, we've got some larger activity that's been coming with price action maintaining above. Really thought it was interesting, the activity just right out of the gate and all the financials, and like seeing some of the rotation in some of these different sectors showing relative strength. But find it notable or worth mentioning, about 2 minutes or 1 to 2 minutes after the open, they just started hitting all the financial names with size dark pool activity. So we had WFC, BRK, GS, JPM. I mean, just all of them. We're talking about, over 1 million shares in each of those. And it really just helped to set a segue for the rest of the day, and those financial names really some nice outperformance there. So focusing on some of the activity that we've had more in individual sectors. Last week we had semis, and found this extremely interesting because we had dark pool activity coming in to all of the names within the semi grouping, which is really unusual. And I know we still have NVIDIA yet to report, but it's not something that we've seen previously before NVIDIA's ER to say that it's kind of driven there. I think that there's just across the board a lot of activity there. So very focused on that space because we're continuing to see some larger size come in, and these levels are holding. We're trying to bottom, trying to create some bases here. So I know we do still have CPI, we do have some data, but you mentioned it too, Gav, that where a lot of people got stuck, as we started to move off the bottom with COVID was, oh my God, the COVID numbers are bad. This market just can't do it. Like the thinking behind all that instead of just really trying to follow price action. So, I know we've got the narratives out there, but if you continued with that throughout that whole run up, in 21, you missed a huge part of that because you were letting that news drive your trade decisions and execution instead of what the price action was on the chart. So just got to stay really focused. But good news is this is a great group here. We're going to go over a whole bunch of tickers to get you guys focused and looking in the right direction.
Perfect. Love to hear it. Again, I'll try to just point out for each person. I think everybody brings a lot to this panel, and Mel, obviously an expert in the areas of option flow as well as dark pool data, and I highly recommend, again, clicking in and checking out everything she's doing. She also does post a lot of charts typically. I haven't seen anyone pin anything up in this space yet, but y'all are welcome to pin. I almost forgot to do it, but last week we had a great time with this, and we've got a bunch of interaction from the crowd. So seeing as we already have about 330 people in here, Danny, Andrew, Mel, y'all good to do a little bit more charting tonight if I put out that tweet and ask for some names? And of course, anybody else is welcome to join in from this panel, Juicy and others. So, okay, so for the audience, obviously tonight is more of a speaker-focused event, but we really do want you to be able to interact and pick the brains of some of the people on this panel. So I'm going to put out a tweet and just ask, what tickers would you like tonight's panel to analyze? And if you drop a ticker in there, I will encourage our speakers to go into that comment section and drop you charts and dark pool data and more. So we are hopefully bringing even more value to you being here rather than, just sitting there and being passive. You can be active with us as well. And of course, you can go back and forth with them if you have a question. Sometimes a chart isn't easy to read at once. Don't feel scared to ask questions. Somebody drops a chart, you don't know what's going on, ask a question. That's the only way that you're going to learn. All right. With that being said, let's keep it going. Ben, would you like to go next?
Sure. Great. Well, it's been an eventful week for myself and our story trading community. I've become a lot more bullish. Last week, one of the big things I've been looking for, which started happening with the big earnings from Apple, Google, Microsoft, Amazon, is divergence in price action and performance. So we now see that both on a macro level with the big cap stocks, and I'm also starting to see it with micro cap stocks, smaller cap. So Apple, Google, Microsoft, Amazon, great earnings, very strong, near their 52-week highs. And then you have Facebook, Netflix, Square, PayPal going down. That's a good sign for me, in terms of coming out of this environment where everything was going down. Another good sign is on down days, not everything is down. The breadth is much more mixed, right? And on up days, not everything is up. So I've noticed this shift over the past couple of weeks, and I've been reducing my hedge accordingly. I think I maxed out my hedge at like 17, 18% of my portfolio. Now I'm down to about 5%. And the other thing, I'm also looking at fundamentals. It's story trading. We're looking at the four pillars of sentiment, technicals, catalysts, and fundamentals. And some of those earnings are great, man, for the mega cap companies. And they almost look like value plays. So that made me very hesitant to continue shorting the NASDAQ. So, especially after the Google earnings, I stopped buying puts. I stopped trading puts for the Qs. I stopped shorting a PSQ. I still have a hedge in place because I'm not convinced this is over. But my hedge is I'm shorting small caps IWM with RWM. But I cut that hedge in half today after seeing the price action again. And after seeing that divergence, I've seen a lot of stocks in our universe in the story trading community bouncing at key fundamental support levels. And also some of them starting to break out a little bit on the technicals. Still some overhead resistance. But because of that, I cut my hedge on Russell 2000 by 50%. So like Andrew, I'm feeling, pretty good here, pretty bullish. Most of my hedge is actually in gold and in bonds at this point. So, I'm not going to be aggressively shorting the market. So that's kind of my view on the market. And, I just want to add, I've never said this before, but, as a representative for story trading here, like we don't give out stock recommendations. And when I'm on here, I'm just like a voice for what I'm collecting from the community. Like my opinions are shaped by all of the collaboration and the due diligence coming in from the community. So, I just wanted to give that caveat out there. So, but yeah, individual stocks we'll get to. Lots of exciting things, man. I got a big list of stuff to talk about. We'll keep it to like 3 official recommendations, but I'm going to mention a bunch of other things where I'm seeing that divergence occur. But I'm pretty much in the boat with Andrew in terms of bullishness. Still just a little skeptical because just historically, the amount of inflation we're seeing is something we haven't seen since the the early 80s. So that's something that I still want to have a little hedge because I just don't know exactly what's going to happen. But man, those big cap earnings, impressive. I'm not betting against the Nasdaq, which has Apple, Google, Microsoft, and Amazon in it. So that's where I'm at.
Yeah, good points. And it was nice to see, obviously we saw what happened with Facebook, but to see, Amazon, Google, Apple, the other ones that you're pointing out, showing strong performances here. And hopefully Disney tomorrow for my sake and play of the week. There's a lot of areas here that we are definitely focused on. But I agree with you, Ben, that the leaders have to stay forefront, front and center in our minds. Thank you for the contributions there, and we are going to keep it rolling. Anything else, Ben, on that?
Wait, no, we're good.
Okay, fantastic. So thank you, everybody who's already dropping a ton of tickers on that tweet. Please don't DM me tickers. Please just put them on that tweet. It is pinned up top in the space. It is the only pinned tweet, so you can see it there. We already have 17 people that dropped tickers, and I see our speakers already dropping charts and dark pool data, and it's fantastic. And I love this interaction that we get on these kind of spaces. So thank you for this tuning in, and we do appreciate the kind words as well. Let's keep it going here. Juicy, you want to go next?
What's going on, everybody? I hope everybody's well. I just threw a tweet up at the top before I get into the actual SPY itself, man. I just want to start by saying, look, man, I got a little chopped up today. It's part of the game, but still up on the week. Very, very green on the year, insanely green. I'm only looking at 2 red days on the year, with today being one of them. But getting into this right now, I was looking at a market where, honestly, right now I'm gonna call chop, and I'm gonna tell you why. Currently, we got the SPY down 1.45%. Looking at the sector rise, right? Energy still leads. We're seeing a little bit more rotation in the financials. Those are the only 2 sectors up. So for me, anybody that's playing long, that's where I would want to be, right? So the financials is green. So if we do turn around, it's going to get greener. And right off the rip today, I was long JPM, I was long Piton, and I actually gave those gains back in Tesla, and it was small losses just due to sizing and how much these contracts are. They took my gains back from it, but I'm looking for the financials and energy sector to continue. Now, looking at the chart of SPY, let's go ahead and go down from the top down approach. Look at the monthly chart. I posted something up top. Go to the monthly chart. I'm drawing the arrow at this current candle. Now, what I want you to do is compare how big the last candle is to this candle. We're stuck inside that range. And while we're inside that range, it's a big range too. Just expect a lot of no follow through on some breakouts. Expect this market to move like a chicken with its head cut off, right? We saw yesterday. We went from higher day to lower day in like 20 minutes. Today we were down, and all of a sudden we just turn right back around. So, the indecision is just going to be crazy. So looking at the actual daily chart, if you look at the last 4 days, we've just been stuck in a pretty much a tight range right off that move from 128. So right now we have a lot of choppy environments. And I know nobody wants I know people that just got into trading. You don't want to hear this, but a big part of trading is literally waiting for the market to set up. Actually, that's the most important part about being a trader, is waiting for everything to actually set up. However, it looks like we're going to try to attempt to do that bounce. We did see some money come back in the bigger stocks like Apple. We did see tech push back up pretty strong towards the end of the day. Now, there's another chart that has intraday levels, and it pretty much lines up accordingly with that daily time frame. And those are the levels you want to watch for. I think we're going to attempt to rally above 451.92. We're going to try to push it up to that 453. If we can clear that 453, we're going to go ahead and try to push it back up to 458. But these are just levels. We'll see what happens. And the good thing about being a trader is you go into the market with these levels And if they hit, you attempt to trade. And if they don't, hey, you don't trade, right? The problem is the overall environment's choppy. A lot of people are taking losses, and then they end up facing a lot of mindset issues and starting forcing trades and jumping back to back to back. So just be careful out there. What I think is going to happen is, and just to echo what Andrew said and what Danny and everybody else says, we have CPI Thursday. So CPI is going to cause a reaction in the market. For me, there's already Tuesday. There's one day away from Thursday. Before I start putting money into the long-term aspect of everything, I really want the CPI data to come out. So that's what's going to be first. In the meantime, play defense due to the choppiness of the overall market. Stop trying to let trades run, right? Get in the trade, take your profit, get out of the trade. There's going to be other days. Now, here's the benefit of having the inside month. That month's going to close inside, and the next month, price has to go outside of that inside bar. And when that happens, we're going to get a big move. Now, my crystal ball saying whichever way, Powell dictates what we're going to do, 25, 50 points is going to cause that massive move to cause that month to break out. But again, that's just a prediction off a fake crystal ball. So, but yeah, that's it for me. I got a couple names here. One last thing I wanted to say was XLI. We went inside up on XLI, which is the industrials. So we're trying to stage a reversal here. So we want to keep that on watch and I have an idea that you guys can attack. But yeah, thanks for having me on.
Really like what you did there, Juicy. It's something that I think more people should experiment with, which is multiple time frame analysis, right? Where you're not just looking at the 15-minute or the 1 day or the 30-minute or the week. You're really pulling out and looking at all different types of, because I think some people are under a common misconception, like, hey, I'm looking at the 200-day on my session chart. That 200-day is a really important factor. I should only look at it on the session chart. But you pull out to the weekly and you see, oh, it's actually, could be a key support level here. So that's something that Brian Shannon taught me through his book, which is in his profile. And it sounds like you're, obviously using a lot and teaching it to others, Juicy. Is there any tricks within multiple time frame analysis or tips that you would have for the audience?
So for me, my highest conviction plays are time frame analysis plays that trigger. So for me, I had this Visa swing on a while ago, right? And what was going on is I had a multiple time frame hit. So I was inside on the daily, and my target was outside week. Well, if my inside broke up and hit my target, well, technically my weekly trigger just went off, which is more powerful than a monthly trigger. So then you have to take it up to a weekly chart and determine where it's going to go. And the next area was that at 233.60. So at that point, all those time frames align. All those time frames are green. All those time frames have volume. And when that happens, that's where I add size. That's the one I'm like, look, I'm going to get bi-weeklies or monthly, and I'm going to put a bunch of money into this. And because that's the way that more than likely will go with high conviction. And I'm going to widen out the stop. Everything else for me is just basically quick. And one thing you just said is, multiple time frame analysis. Most traders, and this is a downfall, only look at a daily, and then they drop down to intradays. Look at the higher time frame. Is that weekly's choppy or stuck inside a range? 9 out of 10. If you get a breakout, it might be short-lived depending on what the market's doing or what your sector is doing. So multiple time frame analysis and sector alignment is the key, especially in a choppy market or in a market where I call this right now reaccumulation. While we're in this reaccumulation phase, you really want to stay in the winning sectors, which is energy, in XLF foremost, and everything else honestly should be a day trade.
Perfect. Appreciate the elaboration there. Really good stuff. Juicy, thank you as always for being on here. Okay, we are going to keep rolling. Hope you all are enjoying this as much as I am. A great time coming in. Just a reminder, everybody that you have heard from on this panel trades full time and is successful at it. Like, everybody up here has even services that they offer. People pay them money, right, to hear their thoughts, hear their sentiment, and everything that's going on, and they're coming in here and doing it for free. So much love to them for doing that. I'm just here trying to learn from them. We have decades and decades of experience combined in this room, and I hope y'all are clicking in and checking them out as well so that you can continue to learn from them even after this space is over. But of course, if you're here every week at 8 p.m. EST on Tuesdays, you will continue to learn. Okay, Blake, want to go next?
Yeah, I appreciate that. Once again, great to be back with my colleagues and peers up here. Danny, I think you're inside my head, bro. I think you literally just took everything that I was going to say. But just to kind of reiterate and make things simple, this market has not been easy, especially these past, really 2 weeks. But the fact remains is that we're still in a 9-day uptrend now from my definition of an uptrend. And we still have to give the benefit of the doubt to the bulls in this market. And today was a very important day for me. One of the key averages that I, pay very close attention to for swing trading is the 10 simple moving aim. I know Juicy uses the 9, it's very similar. But for me, it's the 10-day simple moving average. And the reason I use that is because it gives me roughly 2 weeks of trading, activity. And so today, the S&P was opening right on that 10-day moving average, and the NASDAQ actually opened below it. So this morning I was expecting us to come and fill the gap down, and we did. And, I was watching to see if that 10 SMA was going to hold. For a while, like Juicy was talking about, it didn't look like it was going to hold. And then before we know it, we rally and reverse towards the second half of the day. But, we're still kind of in a chop zone that Juicy's talking about. And for me, it's very simple. Nothing has changed since my analysis of last week of where I'm going to get long and where I'm going to potentially get short. And it's all about having discipline and patience as a trader. And I know we talk about it all the time, or at least I do, but you don't have to trade every single day. But you do have to trade the days where the odds are in your favor and the market is favorable to trade. So how do you know when those conditions are met? How do you know when the market is in your favor and you're on the right side of the trade? Well, first off, trading with trend and momentum obviously is going to help you out. But secondly is trading price action. Juicy was given some technical terms, inside up, that doesn't really matter for these purposes for what I'm about to tell you guys. But essentially, we're still consolidating. We've been consolidating on the S&P, well, really since February 3rd. We've just gone sideways. It's been really volatile. And for me, it's a very simple trade. If we get above the February 3rd high, which, like Danny was referring to, is 453 on the S&P, I'm going to go ahead and get long. And I do think that does take us probably to fill the gap, which was from the second. And once we get there, I think it's almost inevitable that we do come and tag the 50-day moving average right around 460. Now, from there, then it's kind of all bets are off. I'm not trying to get longer. I'm not trying to scale. I want to see how the market reacts. Because similar to Danny, my bigger, picture perspective is that we do have another leg lower, but I'm never anybody to front run a market. And so even though that might be my thesis, I'm still going to pay attention to price action and still give the benefit of the doubt to the bulls because we're still in an uptrend. If or when we break trend, then I'll reassess and, we'll have a different look at the market. But until then, still, tradably bullish. I think above, 453 on the SPY. It's the second person in here that said it. It's probably a really important level. But above 453 on the S&P SPY, I'll get long. And above the February 4th low, which was 443.83, I think that's the start of the break towards our second leg lower. So if you're super aggressive and if you want to, try to short that, I think that could be a good place to try to maybe get short, with obviously some risk defined. So like I said, it's really simple for me. Long above 453 on the SPY, short below 443.83. And you guys know I'm all about the financials. So that was my pick last week, and I'm still riding them.
Okay, riding the financials. Excited to get into actual stock picks. So we will hear more of those from you. I always appreciate when people give us key levels that they are looking for as triggers. And I do recommend, again, if you're in the audience and you're coming to these, have a pen and paper, tag these key levels, set them on your charts. If you're using something like TrendSpider or TradingView, it allows you to, drag and drop. And I would even just have it sitting there like, hey, here's a line. Here's Blake's level. Here's Juicy's level. See if there's, line up between what multiple people are saying. Of course, you should always be doing your own research, right? But it certainly helps to look and see what other people are pointing towards as key levels. Overall, that is kind of what the market is doing, right? It's these institutions looking and finding these key levels and trading off them. That's a lot of that money that's moved on a daily basis. Really good stuff, Blake. Thank you. Okay, and of course, Vegas. We were excited to have you on some spaces this week. I was also checking out your Discord when I wasn't sending emails, answering DMs on spaces, and everything else, but it's great to have you in here tonight.
Yes, thank you for having me, and it's been great. We had a nice space event yesterday. We talked about how nasty Facebook looked, and especially when it would pull back below that 220 level, and that was a fun trade on the bear side. So yeah, I had to be bearish, and was we talked about that yesterday, and hopefully if people were listening, they were able to obviously make money off that trade, and even if they day traded it, the good money making opportunity. And it's interesting because the market cap is now below 600 million, and Nvidia actually surpassed Facebook in market cap today, so that's interesting. So I'm watching these levels that the panel has talked about with respect to the SPY as well. I actually would like to see the SPY break. I like the ones you guys are talking about, the 450 level or holding that area, but I would like to see it get over 455 for a really bullish confirmation. I would be really comfortable going like super long on SPY and would see like a big move to the upside. And when I say big, like I'm thinking like a $20 move on SPY if it broke 455. I'm noticing the QQQ has a lot of catching up to do. Could it be that some of these, earnings that have come out have had a bit of an effect, and then we still have Nvidia scheduled to report. Apple did great, and that's looking good. And we talk about that when we go through the rotation of stocks. But pretty much today, I was away for part of the morning, but my team was on it. I mean, they traded Peloton. They saw the 8K, and they were on it this morning, and they followed the money flow. And they had a great trade. I'm sorry that I missed it because it was a really good trade. So that looks interesting. And I was even watching the tape actually after hours. So Peloton's looking good. We'll see. I mean, tomorrow's anything's possible with Peloton, but I think the market seemed to have liked the news from the 8K. And regardless that they were having the earnings after hours, I don't think that was really relevant to the way that the stock moved today. That 8K came out and the market liked it. And that's the bottom line. Like the market, market can come. 8Ks are, sent out. And if the market doesn't like it, you'll see the reaction. But obviously the market liked it and Peloton had a good day. So just continued with the Facebook puts. I know some people, I think, closed some of those up, took in some profits. And, I didn't really trade a lot, but I did have some good success with Wells Fargo swing and, and some SPY into the close, day trade on SPY, and had a nice run, a nice pop at the end of the day. But, I need to still see confirmation on the SPY side. I am liking that it's over that 450, but I would love the 455 would be like so much more appealing. So I'll definitely be happy to share the round when we go through the round table, some plays I'm eyeing, but definitely saw some travel stuff, travel sector doing some pops. And so I have a couple things to share tonight with the audience that may be of interest or something to check out. And so look forward to doing that when we go across with the team. So thank you so much for letting me come up here and share some commentary.
Absolutely. Thank you for sharing. And I liked how you came in with a different level there and gave your reasoning for it. It's really great to be able to dive into the minds that we see with everybody up here. Ben, you have a comment?
Yeah, speaking of Facebook dropping under 600 billion, just literally 2 minutes before you said that, Vegas, I was reading an article online that there's actually a silver lining for them in that they can dodge some antitrust bills because they're crafted for companies 600 billion or over. So I just tagged you on it. Pretty interesting.
Oh, yeah, I said million. I meant billion. Thanks for catching that. Sorry.
Oh, I heard billion. Okay.
So you're saying they fudded themselves? You get underneath that.
I don't know.
It's a classic Zuckerberg move. Very robotic, very calculated.
Inside job.
The call is coming from somewhere in this room. Yeah, it's good stuff. Okay. Thank you, everybody, for that first round. We are going to go now to our co-host of the evening, stock market news, on fire this week with earnings. His following count's been soaring through the roof. We love to see it. If you're not already following stock market news, you've got to hop in, throw him the follow. What's going on, Evan? How are we feeling about market sentiment?
I appreciate that, dude. Oh, always one of my favorite people out here. Love doing stuff with Wolf. Big shout out to him as well. The Space is King. Big shout out to all the speakers that we have up here. First of all, make sure you go in and check all of them out. I won't lie to you. My week has been spent mostly covering all of the news and earnings and stuff. And as we come into this earnings season, my time to really look at and keep up with market sentiment does go down. So I won't really come in here with unprepared and really unthought out opinions. So I won't have too much there. I do just want to say big shout out to all the speakers that we have up here. All these people do have better stuff they could be doing, but they're here for free, sharing some really fantastic information. There's always stuff I can say. I am someone who could always talk, but we don't need to cut in on this fantastic spaces. I'm here to listen and maybe throw in some stuff later. But back to you, Wolf. Maybe we got to talk a little bit about something I don't know we mentioned too much today. I don't know if we just haven't been on spaces much together, but you do so many spaces. How are we able to keep up with all of them? Do you have a way that we're able to do that?
It's true. I haven't talked about it a ton today. I'm very happy to talk about it. Maybe I need you on more of my spaces. It's because I've been on a lot of NFT spaces today. And what Evan is referring to is we have an incredible tool when it comes to finding Twitter spaces. And I am personally of the mind, this is one of the greatest ways to acquire free knowledge from experts in the world right now. You can come in live time, listen to people, pick their brains, chart, learn, understand, and so much more. And he's correct. We have 22 different spaces this week covering every major investment topic. If you take a look at my pinned tweet, you can see them all. But how can you know when they're all happening? What's the details? What if something gets moved? We have solved this problem with a free tool available to everybody right now. If you're not already on it, you will want to join the over 3,000 people that are using this on a daily basis. And that is our Twitter Spaces Google Calendar. We've worked diligently to create a free public Google Calendar. Anybody can join it by DMing me right now and shooting me a Gmail and asking to be on it. It does work with other emails, but Gmail is seamless because it is built for Google Calendar. You can also DM Stock Market News if you'd like to take some of the burden off myself of these DMs. But I'm happy to add you to it if you want to shoot me that Gmail. And essentially what this will allow you to do is you will see when every single space is, who is speaking on it, what the topic is, all on your personal calendar. Toggle it on, toggle it off. Easy peasy, lemon squeezy. And the best part, we even take these recordings that you're seeing, this is being recorded, and we put it right into the calendar as well. So stop scrolling through timelines trying to find, I heard this space and they had great stock picks and I wanted to reference back. No, join the Google Calendar now. You will not regret it. It is the single best tool on Twitter for finding financial Twitter spaces. And if you don't like it, you can unsubscribe for free. Doesn't even send us a message. No harm, no foul. Stock Market News, anything you want to add to that?
I think that was perfect. You always do those so well. Just to add quickly, we always do put the recordings in there after. This is one of the best things that we do have out there right now. It is free. It will always be free. And we're looking to improve it going to the future. What does that exactly mean? We still have some talks going on in the back end. And I'm not promising anything next week or whatever. But we do have a lot of really cool stuff planned with that Google Spaces calendar. Make sure you are in our DMs. It's not something you're going to want to miss. These spaces are so fantastic. There's so much value, so much free value being given out. The use case for itself really does build it out there. So super excited to be doing all these spaces. And everyone send us your Gmails or emails or whatever you got to our DMs. Back to you, Go.
Yeah, fantastic. And then once you get those, as long as you're following myself and Stock Market News, you will see our spaces show up at the top of your timeline. We always start them on time. We are committed to the game. Just for reference, I have spent over 17 hours on Twitter between today and yesterday. So if you like Twitter spaces, this is the right place to be. Let's get into stock picking now. So each speaker is going to have about 4.5 minutes to go through 3 picks for the rest of this week. You can go bullish, you can go bearish. We would love to hear your reasoning. And then at the end, I will just ask you to repeat the tickers of those. I'm going to be writing those down, and I will tweet them out afterwards. Let's go ahead and kick it off. And Andrew, would you like to go first?
Yeah, sure. So for this week, my picks. So first one is good old Bitcoin. So this Bitcoin bottomed out and had its trend reversal on February 4th. And what I was really looking for in crypto assets, like my long view on crypto assets, are that they have, some big upside. But with these cryptos comes huge volatility. So I keep a bunch just like as a long-term investment, but I also trade these crypto assets as well. And it's super important to be able to get out of the way of these things when they enter their downtrends. But I was waiting and seeing, like, when is this thing going to bottom out? When are we going to turn around? And I noticed on February 4th, we got a push above the 20-day simple moving average on nice volume. And we really just pushed above it. The RSI also pushed above a 50, which is good. So I added a position in the Bitcoin futures ETF, and the ticker symbol is BITO. So you can really use whatever instrument that you want. If it's in a brokerage account, you can either use GBTC or BITO, or you can always just go with the good old spot Bitcoin. But that's definitely, my top pick. And I think every time these cryptos have their crashes, it's always a great opportunity for new investors to come in and buy. Unfortunately, new investors rarely ever want to buy these cryptos when they're close to the bottom. Usually it's really tough to convince people to buy, at these levels. But then once it goes up to 65K, then that's when everyone jumps in. So yeah, Bitcoin, that's definitely my top pick. I have a long view on that one. And then my second pick is Apple. And Apple reported really nice earnings on the 27th. And we had a great reaction. So with a lot of these companies and with this market action, I'm looking to see, what does the market do when they report their numbers? Anything that hasn't reported yet, it's really tough for me to touch it given this market environment. So yeah, Apple definitely got the green light from the market. Out of all the mega cap tech stocks, it's trading closest to its 52-week highs. And if you look at the chart, you'll notice all we really need is one more day of a nice push higher, and suddenly those all-time highs are directly in plain sight. So Apple, I think it just has a lot of good things going for it. Reported good earnings. They said on their earnings report that inflation really hasn't been a problem for them. So it's okay, this is a mega cap liquid stock. It's a household name. Investment managers won't get fired for owning it. It makes up 6 to 6.5% of the S&P 500. So if the S&P 500 is moving up, most likely Apple is coming with it. So yeah, it has a lot of safety attributes, and right now it's a leading stock as well. So I'm currently long. I took a trade in Apple this morning. I got long some call options in Apple, and they were February calls. And I ended up closing those out for a nice winner, and I switched those over to March calls for Apple. Currently, that's my biggest options position. So yeah, I really like that one. We'll see how it goes. But yeah, those are my two picks.
Just want to put out there that the last time Andrew called Apple out as a pick, it ran 20% or something. And that was after it was already up at the highs. You picked it at the highs, and then it boomed from there. So pretty exciting to, see you're looking at that again. And then Bitcoin, definitely a really interesting one, super split sentiment at the moment. But I do hear with you, it's funny that it's a little bit easier to get people to buy up at this 50, 60,000 range than it is down here. And, it did reclaim that 50-day moving average. And if it can keep it a little bit stable here, maybe you will build out even a upward tilting 50-day moving average. But perfect.
I'd like to add just one more thing about Bitcoin. I almost forgot. So the big catalyst that came out was KPMG added Bitcoin and Ethereum to their balance sheet, which was wild. So the reason why I think this is such a big catalyst, we've had companies add to the balance sheet before, right? We had Tesla add it. This was about a year or so ago. And that was huge. They were really the pioneers. But with Elon Musk, a lot of people think oh, Elon Musk, he's crazy. He's a pie in the sky thinker. he's a risk taker. This thing's going to go to zero. I hate Elon and I hate Bitcoin. But KPMG, they're like an accounting / audit firm, and they're pretty much about as conservative as it gets. So I think KPMG is really like the first traditional corporation that doesn't have like a celebrity CEO that's adding these cryptos to their balance sheet. So I think the bump from KPMG is huge, but I think this could turn into like a domino effect where other companies now, they're going to see that announcement. They're going to go, wow, KPMG, they're straight shooters. Why'd they do that? And they might start looking into it. So I think that's another, just like a big picture catalyst. Definitely a huge, huge development.
Perfect. Apple, Bitcoin, easy to remember. Keep an eye on those, folks. Okay, let's keep it going. All right, Vegas, let's go to you.
Sorry, I'm right here. So, let me see which ones I want to talk to you guys about. Okay, so Andrew covered off Apple, so I'll take that off my list. And I am long on Apple. I love the money flow. I love everything about it. Love the earnings. Talked about it before the earnings. So no need to cover that one. But I will say one to watch, and I have no position in this, but I am watching Costco. And one of the things we noticed on Costco, and Mel can probably see also on the dark pool, not this week, but even last week, there was some dark pool flow on Costco, and one to not take the eyes off because this can move. And I am waiting for the break of 525. So it looks like it wants to eventually break. It's just when, I don't know. So gotta watch Costco if it can break 525. That's one of my picks that I believe will have a nice move to the upside on Costco. We'll have to see if it triggers. I mean, it's going to take some time. So there was some range contraction yesterday. Maybe today the chart doesn't look the best, but it's looking good. Like the setup is going to trigger if we can get over this 525. You can, watch the buyers actually step in if it breaks 525. So definitely watching Costco. And the other one to mention is ABBV. And I have never really traded this one, but I am liking this one. Have a swing in play. It's actually just getting started. It's not really made its move just yet. So ABBV is a good swing trade idea. And the reason I like it as well is this also had dark pool prints coming through. And this trade for us triggered yesterday when it broke that 142. And we could see here that even today, there was some movement on this. The chart is gorgeous. Look, if you love good charts, you would love this one. And high of day of 143.60. And this looks like it's going to have a nice continuation. I want to see this personally. My targets on this would be around 145 to 150. So that's kind of where I'm seeing this go next. What I like about it too is it doesn't move like super crazy fast. So I like the way that it's moving nice and slow at a nice pace. But what I also love about it is that there has been money flow. So those cats have been buying the stock. And so the fact that they're buying the stock is a good sign. And I have confirmation now that those prints that came through on the dark pool, all the share price right now, the stock is above those levels. So obviously they were buying, and we could still has room to, head towards 150 potentially. So I love that one. And then my last one to consider is Visa. Love Visa. I know Juicy's traded this one many times before. He's actually made me fall in love with Visa too. But Visa, I love the chart, 200-day support, beautiful inside day the other day. And the thing is with Visa, I believe they already had the earnings are all out. So watching for Visa though to break, I'm still waiting. I have no position on this, but I am watching this on a watch list if this can break 230. So if it breaks 230, if there's any type of momentum between now and the end of the week, this has room to go anywhere from to 234 to 238 is where I'd be targeting it. So I'm really looking for those big dollar moves. I'm not really interested in $1 moves, or even, I don't mind a $2 move, but $1, it's tough to make money on these options when it's just $1. When you're going with something shorter term. So I like something with big moves. You can go in with size, and obviously pick the right expiry date. But these would be swing trades, the ones I'm talking about. They're definitely not day trades unless there's obviously some sort of momentum happening at that moment. And then obviously you could day trade it and then obviously roll up into a swing. But the ones I've talked about tonight, Visa, Costco, ABBV, if Costco triggers, or Visa, I mean, those are swing trades. And there's good potential on these to make some good money if they get going. So those are my picks.
Perfect. So can you run through those tickers once more for us? I know there was Cost, AbbVie, Visa.
Yes. So just those ones. Costco, COST,
Yep.
ABBV, AbbVie, and V for Visa.
Yeah, what a beast AbbVie is. I mean, that's one that's been on my radar for a really long time. And I remember we called that out on Spaces before this run, and then it just absolutely exploded here. If you're looking on the weekly especially, you can go and look at the move. When everything started going bad, that first week of November, we did see a little bit of red for a week or two, and then since then up 25% in 2 months, 4 weeks, while the rest of the market has been falling. If anybody has listened to my Spaces with my good friend Brian Shannon, this is what you want to look for. Stop buying the broken stocks in the downtrends. Go towards the ones that are soaring and showing leaders in the market. And then on those other names too, I know that they have consistently come up. Costco is definitely an interesting one, kind of like the pattern it's forming here. Looks a little bit kind of like the S&P. So I think it's similar to what you were saying there. If the S&P was to break certain levels, I'd kind of look at cost in a similar way.
Yes, definitely. And the thing is with Costco too, I mean, obviously it is a defensive consumer staple stock. It's, one of those kind of stocks that you actually like to get when the market in a falling market. So I think that regardless of economic conditions, I mean, this is obviously a product, a company that, consumers still have to go there to shop. They need essentials, they need necessities. And obviously, they have everything there, right? Food, beverage, hygiene, household, tobacco, alcohol. It's like a one-stop shop. I mean, people do need to go there, and they will go there. And I don't know, every time I've gone to Costco, it doesn't matter what day, what time, the place is rammed. I've never gone in there where it's like empty. So they're obviously making money, but it's, definitely one of those stocks. And we know with inflation numbers sometimes being worrisome, it could obviously lead to weaker markets, but stronger position for consumer staple stocks. And this is why this is one to watch, and we'll see if it can break that 525.
Perfect. Thank you, Vegas. Okay, Juicy, you want to go next?
What's going on, everybody? Give me 1 sec. You guys know I don't like talking about charts without posting pictures, or else people are going to be confused. I'm throwing one idea up top now, which is Google. I'm going to break that down in a second. I'm throwing the next one up, which is Chevron. And I'm going to throw the last one up, which is Boeing. And it's a little unusual pick for me. I had costs, but, this was just covered. And I just want to say, just to tag along, if you guys ever seen the Chinese Open of cost, like, as soon as the garage door went up, there was legitly 500 people in the building. So cost is insane. But going straight into this, we saw the XLI today try to make a move up. We went inside up. So I'm going to be watching Boeing, ticker BA, long above the 213.87. We're looking to take this up to the 218.32. I prefer to take this to the long side. The short side trigger is going to be 209.67 for a move back down to that 205. But you got the moving averages in the way. Two things here with this and why I really like this. We have positive flow coming in. You also have algos actually buying. Take it up to the weekly time frame. You're nice and green on the week. Take it up to the monthly time frame. You're one of the very few stocks that are green here on the month. Next is going to be ticker Google. Massive earnings, great earnings, 20-to-1 split. Oh man, and then they've been selling it off, and we came back today and filled the gap. Now we're gonna have conflict on the higher time frames, but man, we're setting up for a reversal. I don't think it goes lower. It could be completely wrong, so don't take that as financial advice. But I like this above the 279.988. Whenever we can get above that, we'll start a move up to that 288.747. I'm actually looking to swing this position. The flows were a little mixed here. But again, price action is king. So when the flows aren't matching price action, that doesn't mean I don't trade. I'll probably drop my position size down into a starter position. Maybe not hit it with the full size right on the opening of the trade, but we'll definitely keep this on watch. Next is going to be off the back of energy. Energy is the strongest sector here. This one again, I'm going to take this one with limited size because of how close we are to all-time highs. We actually are at all-time highs. The ticker CVX, and when we're at all-time highs, you do run into exhaustion risk, which is basically, we're just drifting higher than you ever see something at all-time high. It's just freaking sells off. People taking profit, right? So you are running into that risk, but as long as we can clear the 138.43, I got a 1618 extension at the 142.11. Now, I know energy has some little bit of pullback, and that's to be expected in the actual sector after being up 23% year to date. But those are my top three, which are going to be Chevron, Google, and Boeing. All posts, all triggers, everything's been posted above.
Perfect. Everybody make sure to check those out. Really good stuff from Juicy here. Gotta love it. Riding with some of the really strong areas of the market. GOOGL, always a killer. You really can't go wrong in that area. It's a great short-term, great long-term. Kind of works all around. Looking at that chart, yeah, it's nice. Had that big pump, came back down from it. Could form a little base right here above the year-to-date anchor VWAP and the 200-day and continue, look for a continuation. What else we have? CVX. I definitely saw some people riding with CVX. It's a powerful industry. If anybody's in the audience, I recommend pulling up that chart that Juicy just laid out with CVX. Again, we're looking at market leaders. A lot of stuff has been pulling back. Find the areas that aren't pulling back. Find the areas where there's strength and opportunity. And then that last one there, that again was BA. I don't trade Boeing personally. I feel like too many people I know have been burned by it, but there's definitely opportunity for those that are quick in, quick out. That's what I've learned there.
Juicy, I thought you were one of those guys that didn't trade Boeing, man.
Well, here's the thing, man. I made a massive gain on it, and I was like, you know what? I'm going to take this off the D&T list. We're rock and roll with it for now until I get burnt again.
What a call by Blake.
The DNT, the do not trade list.
Hey, man, I know my boy Juicy over there.
I got a little
desperate one day. I got a little desperate one day. This thing came on the scanner with some volume. I took like 140%, and I was like, maybe I have to pull out the closet. But yeah, guys, I'm gonna go ahead and run. I have to do my nightly preparation with my team. Get ready to kill the markets tomorrow. Big shout outs to everybody here. Danny, Blake, everybody, Wolf, everybody up here. Make sure you guys follow them. Appreciate you guys for having me on. And if I don't see you guys, I'll see you guys next Tuesday. Be easy, everybody.
Take care, brother. Appreciate you coming on. Okay, let us keep it rolling. Ben, would you like to go next?
Yeah, awesome. First, a shout out to Vegas because we had Andrew talking about Apple. Love getting that technical kind of validation of all-time highs, but Vegas was on our own spaces before earnings, and she said, don't bet against Apple. This concede all-time highs. Man, that was a call because Apple was like at the lows then, down 10, 12% from the highs, and she's calling for all-time highs coming shortly after earnings. So, that's one of the things I love about story trading is we look at technicals along with the other pillars of fundamental sentiment and catalysts, but I really think technicals is like a lagging indicator. I'm typically trading stocks I do a lot of research on. I know the fundamentals. I know the catalysts. I know the company inside and out, and often I'm trying to jump in before technical levels break. So, just some context now in some of these picks I'm going to give. I'm not a pure technical trader at all. I'm a story trader, not a day trader. Story trader. What's that means? It means I'm holding a stock until the story either until the story comes to fruition, right, and meets my targets, or some specific event happens, or unless the story breaks down. And again, that story encompasses all four pillars. Sometimes that means I end up holding a stock intraday or for a day or two. Sometimes it means a week or 2 weeks, and sometimes it could be years, right? So I don't know my time frame, right? I basically do stops. I don't do a technical stop. I do a story stop. So that's just some context for some of these picks we're going to put out there. So the first one, CFVI, we talked about last week, that was up 36%. I've been holding this for 2 months, right? Waiting for the story to come to fruition. And that story, well, gosh, I wanted to post some stuff. Maybe after I stop talking, I'll get it and pin it to the top. But that story was really about CFVI becoming a little like that DWAC. What we saw with DWAC, huge sentiment around that Trump play. And I thought that sentiment was a little bit misplaced. CFVI, Rumble, the SPAC buying Rumble, is a company that has that same sentiment behind it that drove the overvaluation of DWAC, but with much, much, much better fundamentals. There's a chart I'll post shortly about the monthly active users. They posted record metrics last month, 10.8 billion minutes watched, 39 million monthly active users. And that came before the whole Joe Rogan stuff. So the catalyst kept coming right one after another. And I'm still holding on to my shares. This is my largest position. I've been holding for 2 months, up 36% week over week. I haven't sold, and I think this can go much, much higher. And again, I'll post a tweet about why I think that is. I think that you're going to be seeing a lot of people who are philosophically buying the stuff for philosophical, ideological reasons, and they're going to be holding it with diamond hands, absorbing all of that float. And as the catalysts continue to come, and as the company continues to execute, I think we can see some sort of like mini DWAC run. I'm personally eyeing 20 to 25 to start taking some off the table. It's at 16 or so now, 16, 20. But I wouldn't be surprised if it goes to 30s or 40s. So that's my largest position. Got a lot of conviction in it. Got a couple other picks for you. First of all, there's a lot going on. Again, everything I mentioned, we have YouTube videos on it. We have articles on it. In the past weeks, I've talked about VTSI and REL. We've had articles published on Benzinga on those. BCRX, BioCris, which I'm going to make a pick now this week. I've talked about it before. We have a YouTube video that just came out on that. So BioCris, if you go look at the chart, it's at like $17 kind of breakout levels. And this one is poised to go to new all-time highs into the 20s. And we were way ahead of this before the technicals turned because they had these incredible catalysts that was changing the fundamentals in terms of their lead drug, upping guidance for it to become a $1 billion annual revenue drug. Before that, they got $300 million in non-dilutive financing. I mentioned this before, but right now the technicals are coming into play, and I think it could be a very good short-term play going from like 17 to 20. I'm not the technical guys. Other guys on the panel, if you're interested, I think it may be worth your time, the technical traders, to look it up. You guys are into the short-term options. This might be one you want to put on your watch list for a quick move to $20, possibly from the $17 range. It's BioCris. I'll post a YouTube video on that as soon as I'm done talking. I'll pin it to the top. The other pick I want to point out is Wallbox. Again, this is another stock. We call it a VIP pick in our community. Wallbox, we've been in this since around $10 a few months ago, and it's like 16 now. It's an EV, it's a SPAC, it's de-SPAC now, EV charging play, but the fundamentals on this, not necessarily the financial fundamentals, but the business development fundamentals on this have been extraordinary. They keep on getting these huge deals with Uber, with Hyundai, and they're going to be doing some Super Bowl commercials. So I think this is a shorter term. I haven't picked any up yet, but I may pick this up as a Super Bowl play. An event anticipation run is what I call this one, with an exit on Monday morning, because a lot of people are going to be exposed to Wallbox with these Super Bowl commercials. And it's not just the event, but again, it's the fundamentals and the sentiment. The sentiment today, there was DCFC, another EV charging company, up 60% today because some new factory that they're opening, and they're going to be at an event with President Biden. So now you have the sentiment of the EV charging space really positive. That's going to be another tailwind for Wallbox in the context of already strong relative strength and technicals, and in the context of these strong fundamentals. They're going to then layer on top of that a Super Bowl commercial Sunday night. I think you can see this stock going up the rest of the week for people anticipating the move, and then you can see a pop Monday morning, and that's your exit. So that's Wallbox. That's my third one, right? Did I do three? CFVI, BCRX, Wallbox. I'll also mention, not an official pick, but SoFi, which is something we've been covering recently, also could see something like that happening. Now, it's a much larger market cap, but the Super Bowl is at SoFi Stadium, and I bet you there's a ton of people who don't know this. Ton of people who don't know the Super Bowl is at SoFi Stadium, and you could see SoFi really doing well on Monday morning. He has a larger market cap. I don't know what kind of move you can get out of it. Maybe you can, do some options to get some leverage in a move like that. But that's story trading, folks, right? Story trading is looking at the catalysts, the fundamentals, the sentiment, the technicals, and holding the stock until the story changes. So a lot different than what a lot of other people do up here. If you have any questions, happy to take them.
Really good stuff there. So I